This is Darren Blonsky. Chelsea Runnings is with me, and Mary Piazza. We're coming to you live from beautiful Sonoma. Starting to see some live back in town, and people are out and about with our masks. I've got my Red Sox mask, so I'm ready to go. You were glad to be here today. We thought we would put these Zoom meetings together to really just talk about what we're seeing going on from an economic, from a legal, from a real estate. As you might or might not know, Chelsea is a local real estate agent and focused in on probate law, or probate real estate, I should say. And Mary is works with one of our local law firms. I'm Darren Blonsky with Sonoma Wealth Advisors right on Broadway. We're going to kick it off. It's just a discussion. We hope you find it helpful, and we'll just give you an update on the latest and greatest and what we see out there. Mary, you want to take it from here?
Yeah, thanks for that, Darren. So I think right now what we're seeing is that we are in a unique time. No one's going to debate that. The problems in the legal community are showing holes in both our laws, but our infrastructure. So what we've been seeing is the interplay of different governmental bodies coming to address those holes, and it's causing some confusion. At least that's what I've been dealing with the phones here. And in this video, hopefully the three of us can attempt to clarify some of these things. So one of the things we're seeing are the government bodies making policy. We have the Treasury imposing additional restrictions on loans. We're seeing this at the state level. This was already a year in California where there were more than 30 anti-business laws, including a very strict privacy law that's rolling out this summer. So when you add COVID to that, you have this weird interplay of laws and affecting them. At the county level, we have confusion among different folks as well as individuals as to who is going to have relief from various programs, including property tax payments. A lot of the legal confusion in California from a legal point of view, has to do with the eviction bans. And with that, we had initially the governor say that there would be a residential eviction ban and encourage that, but it was left to the counties to enforce it. So there's been inconsistency throughout our state. What ended up happening is that the Judicial Council stepped in to actually stay evictions for not only residential but commercial evictions. So here's a big fact to clarify for everyone. Evictions in California are stayed right now. Another big thing that needs to be clarified is that even though they are stayed, tenants do owe rent. So there's been confusion on both sides about that. Another fact that we're seeing right now is that it looks like California is in the process of reopening. We have our governor saying that as early as this week, we're going to have additional beyond essential businesses reopening. There's a laundry list, florists, bookstores, toy stores, music, sporting goods, clothing outlets, etc. They'll be able to open. However, again, here's where the confusion comes in. It's going to go forward on a county by county basis. So here in Sonoma County, what we're seeing is a little bit more hesitation to allow those things to reopen. So the big thing and the big guidance is to have individuals look into the county and where they sit as to how to appropriately open their businesses and get back into it. So something we're seeing through this, which is a major positive, is that we are seeing pushes to reopen businesses as well as certain governmental branches in a very evolutionary way utilizing technology. So here right now, we're doing this great Zoom conference, but we're also seeing things where the courts are now looking to utilize this type of technology, which they wouldn't have done before. But that's allowing things to go forward and our society to continue to do that. So I'm really hopeful with the fact that government is now utilizing these technologies to then allow businesses to try to get them back open. So I think to wrap a bow around a little bit of a laundry list of things that I'm seeing right now, I think overall the importance really who are our elected officials that are making these decisions. Are they listening, or are they being dismissive? And I think if you're a business who has, or an individual that has some insight, you can reach out to them with potential solutions to try to bridge the gap right now so that we can get back to not only business as usual, but business in its new evolved form.
You know, it's interesting. I was, Mary, just last night, I was reading an article about, I think it's Yolo County in Yuba. No, it's Yuba and Sutter, I think, that they basically just opened up everything. And the health official said, look, we need to get the economy going again. And Newsom came out and was pretty much scolding them and saying, look, you're putting all these people in danger. But at the end of the day, it's like, that's about as far as it goes, right? There's a scolding. So you get this kind of disconnected approach, right? I spent a lot of time in Solano County. I spent a lot of time in Sonoma County. And when I go to Sonoma County, I have to make sure I have a face mask with me just because I have to have them. Whereas in Solano County, it's optional. Mm-hmm. And I think that's a good illustration of what it sounds like we're seeing in law, right? Is like there's not this application of law equally across the board. Is that a good way to characterize it?
I think so, except, however, with this action that I was talking about by the Judicial Council. So with respect to evictions, you had the governor saying, hey, do something. And then you had the county saying, well, maybe we will, maybe we won't, or we'll do, maybe a little bit of something. And then this body that's a part of our court system stepped in and said, no, there will be no evictions processed right now. So they basically put down a big old hammer to clarify the whole scope of things. So, that's a very unique example that's come out of this. But I think with respect to other things, it is very piecemeal. You have beaches in San Diego that were open, the example you gave with respect to the county opening before it was supposed to, and I think it just lends for a lot of confusion in our state. And, I'm hearing from businesses that want to move. They're asking me, hey, if Sonoma's not open for tourism and I have brides, or I have these events to book and Napa's open, maybe I'm going to move my business to Napa because, I can get my business permit there, and it's the Napa community is already showing that it's more pro-business than what Sonoma's offering. So it's, it's sort of this very different, unsettled time for business, but it also offers a lot of opportunity. So maybe for that business, going to Napa makes more sense, for example.
Yeah, it's interesting because there's this need we have as a community to protect each other, right? And I think we've all have seen the disinformation and the political crafting of the facts as it relates to C-19. It's really difficult to know what's right, what's not right. And you're seeing that anger bubble up in communities. And on one level, it's right, though, because you got these people that their livelihoods are destroyed over what it appears now is bogus facts. Some are true, some are not. You don't really know what's real out there. And so then you look at counties like Solano, Napa that are more business friendly, that are open, that have less restrictions on it. And then you have Sonoma County that's very strict. So that's one thought. The other thought I've been thinking a lot about lately, and I'm curious to get both your feedback on this, is we've got a lot of clients here that have businesses on the square and, took a big hit in the last fall during the fires. I mean, just got literally smoked out. And now they've got this hit on them. And if you look at what we got from a rain standpoint, we didn't get much rain this year. So there's a really good chance we're going to get in our fire season that's not going to be fun. And how's that going to impact the local economy? So thinking about that plus the COVID, gosh, you would think right now we'd be doing whatever we can to continue to support local and be smart and safe about it. But we've got to get it moving or it's really going to be hurtful economically.
Well, and I think that's where I've been really surprised with some of the responses I've gotten from local electeds as I lobby the positions of, my clients. And, some of them just say, oh, don't worry about the Sonoma tourism industry. It'll come back. But it doesn't really answer the question what are we doing right now to help these businesses where their insurance claims that they're making are being denied, where they cannot operate. They can't, as of today, most businesses are unable to make sales, right? So I think it really is a huge call on behalf of business to have the elected officials look at creative ways to help not only the businesses reopen, but to encourage them to stay here.
Yeah, there seems to just be a disconnect from like, oh yeah, it's okay, we can shut down and everyone will be fine.
Mm-hmm.
And being in the financial services business, and I talk with clients and consult with them on a daily basis on what's your emergency fund look like, what are your investments. I can say that even people who have a good chunk of money, it's rare that someone has a reasonable emergency fund. That's something that I preach constantly to the clients. And those are the people who are talking to me. And I'm sure there's a lot of others out there that you work with advisors and they have no emergency fund. So they have no personal emergency fund. They have no business emergency fund. It really doesn't matter how sick people get. At some point, people are going to hit a point of desperation. And I think you're seeing that, sadly, in the media, where you heard the President of the United States basically say yesterday in New Mexico, where he was touring, said, some people are going to die when we open the economy, right? And so there's that contingency that's really scared, and they have to do something because they're going to die of starvation. They don't get that fixed, and is putting the public in a weird spot because there's a disconnect between what's real on the ground and what the politicians are saying.
Right, absolutely.
So, Mary, the ban on evictions, does the rule apply the same to commercial as it does to residential real estate?
For California, yes. I mean, it's a blanket stay for both commercial and residential.
And what about people who maybe were being evicted prior to coronavirus and these bans went into place? Are they still in the eviction process, or are they just saying, nope, you're going to stay until this is lifted?
So the Judicial Council statement said that the courts will not process evictions. So if there was an eviction, and my understanding is if it was in process before, then as soon as it's lifted, then that will happen. But it is unclear exactly at what point in the process that will happen.
It seems to be like everything in this is so unclear, and every other day it's like there's new changes and rules and things that keep coming out. It's impossible to stay on top of. And something Darren brought up yesterday was the mutation in the virus that we should be expecting and how it's going to affect us long term. So when we start to open our economies back up and all these eviction bans start to loosen up and the mortgage forbearances start to stop happening, we're going to have this virus mutation, which I saw today is expected to be even deadlier than what we're experiencing now. It'll be interesting to see, are we going to come back to where we were now, or are we going to have to reevaluate the way we were doing things? Because quite frankly, the way we're doing things right now isn't really working. It's too much is left up for interpretation.
Mm-hmm. Well, if you look at the courts, right, the fact that you have this old system that has now evolved, at least in Sonoma County, to start accepting things via Zoom. I mean, that's huge, right? So should the virus reopen, then the jurors and the judges aren't in a position of really propagating the germs by requiring people to attend in-person hearings, right? I mean, you have this type of barrier that's put in, but still that governmental body will continue to operate. So there has to be a way to help evolve business so that, our storefronts here on our sweet little town square can do the curbside pickup or continue to operate in a capacity that, should that happen with the virus, then, business is still ongoing.
Right.
I don't know.
So there's a lot going on. It seems like it's a dynamic time. So Chelsea, I'd be curious to know a little bit more, because we get a lot of questions from our clients that ask us, hey, should I sell my house? Should I sell my second house? Should I not sell? What should I do now? What are you generally seeing in the Valley right now?
So for what I'm going to do is tell you guys kind of what we're seeing in California real estate market, and then break it down a little bit into the Bay Area. But we are breaking records, not good records to be breaking, but Right now, we're nearing 5 million households in forbearance, meaning they are not paying their mortgages for the next 3 to 6 months. And that affects more than just the mortgage industry and the real estate industry. It affects the economy as a whole without people paying. So it's a record we're breaking. It's not a great record we're breaking. And they've had to make a lot of changes to how forbearances were working, because initially, when you do a forbearance, say you forbear your mortgage for 4 months, then month 5 comes around and you owe those 4 months plus now the 5th month all at once. And Darren, like you said, a lot of people don't have a nest egg worth that much, regardless of how much money they might be making. They don't necessarily have that large lump sum of money to get caught up on. So now they've made some changes to where you have a few options when your forbearance period is up. You can increase your monthly payments a little bit until you can pay it off. You can pay it all off at once, or you can move those months that you had a forbearance towards the end of your mortgage, which is good because we don't want a 2008 housing crisis. We don't want people having to foreclose on their houses because they can't pay these mortgages. So that's a huge thing right now that we're seeing, is just all these homeowners who can't pay their mortgage. And from my understanding is there's really no checks and balances on who can get a forbearance. Nobody's really checking to make sure you can't pay your mortgage. You're just telling your mortgage servicer, I can't pay right now, or I don't think I can pay, and they're just giving you this forbearance. So it'll be interesting to see how long-term this is going to really affect the industry. But right now, aside from the forbearances, March BC, or before Corona, we had a tight market. The supply and demand, we couldn't keep up with the demand, and we're still seeing that right now. In early March, before the shutdowns, there was a survey, and 60% of home sellers thought it was a good time to sell, and 29% of home buyers thought it was a good time to sell. As of the end of April, that 60% of home sellers has now dropped to 30% that think it's a good time to sell, but the home buyers has only gone down to 28%. So the buyers are still out there. Things are closing, sales are going through. We did see a drop, about 28% in escrows fall through. Some were due to buyers backing out, but a large portion of the deals that were falling through or being delayed were because of lending, and not that they didn't have the money to lend, but they were just, the demand for loans was just more than what they could actually process. So a lot of closings were delayed. We're seeing more 40, 45, 50-day close of escrows now just to keep up with the demand for loans, which makes sense because it's literally never been cheaper to buy real estate. And what I mean is interest rates are so low, historically low, in the 3s and 4s and 5%. It's never been cheaper to borrow money. So the buyers, they're out there, and they're strong buyers. The ones who are getting the loans, they're strong. They have solid employment. They have the cash to make their payments. And lenders are being a little more stringent with who they're lending to, just because they don't want those borrowers to go into forbearance the first month that they get that loan. But it's moving. We're seeing a little bit more life in the Bay Area. We have,
Chelsea, just to support one of your facts, I love to look at Google Trends. I don't know if you look at Google Trends, but if you type in Google Trends in Google, you can type in different search words. So if you type in foreclosure in California and look at the chart, it just shoots up here, right? And so that means that people are going online and they're searching foreclosure. How do I do it? Do I not do it? Those type of things. It's on people's minds. Perhaps not quite there yet. And then if you look at bankruptcy, Mary, to your point, and look at how those have gone up. Certainly in the first week of April, people were freaking out. It looks like we've had a little bit of a drop here. But that's real-time data that you don't have to rely on the media to interpret for you. You could just really see, how are things doing? How are people out there doing? and what's really going on. Sorry to interrupt, Chelsea, but I just thought that was interesting.
That's interesting to see, because I know, so many people I see on like Facebook, they say, I'm waiting for the market to crash. I want to buy that 5-bedroom, 4-bath house with a pool and a 3-car garage for $120,000. And I don't see that happening. I mean, the pricing that we're seeing right now, it's pretty minimal. Square footage in the Bay Area has only dropped price per square foot about 3.5% since mid-March. It's a little bit, it's not massive, you guys. I don't think we're going to get those massive housing drops that a lot of people think we're going to get. But just to give you an idea of the life that we're starting to see back in the Bay Area, the listings that have finally come back on the market, we've seen 3 solid weeks now that listings have started to increase. We had, right after the shelter-in-place order went into effect in mid-March, we had a 75% drop-off in showings, but that's down now to 30%, which I think has a lot to do with just getting comfortable with kind of a virtual world. A lot of people had to figure out how to do these Zooms and how to do virtual showings, and real estate is something that you need to kind of see it, feel it, and get in and imagine yourself in there. But as people are starting to get more comfortable with virtual tours, and as some of our restrictions are loosening up on showings, those showings are really starting to pick up again. So that's positive for a home seller side of view or point of view, because the buyers are out there again. And we've had a 17% increase in mortgage applications in the last week alone. So buyer confidence is there. We're really seeing it's the sellers that are just pulling back. They're scared to sell because they don't think the buyers are out there. But we're seeing the same issue we've had for years. Our supply doesn't meet with our demand. And right now, as those sellers are getting scared, they're pulling it back. And the buyers, they are out there still.
Are you seeing any trends with...
Go ahead, Mary. Sorry.
I was going to say, Chelsea, are you seeing any trends with the type of inventory that's going on the market? Are we looking at homes under $1 million, between 1 to 2, up to 2? Are they people's vacation homes? Like, is there something that's telling from that?
I've seen more kind of luxury homes or multi-million-dollar homes or $1 million and up. I think more as people are trying to get some liquidity in their finances, they're offloading their second homes and their vacation homes as the stock market is going down. And I'm sure Darren has a ton of clients who are weighing their options as to sell this house to have more cash liquidity on hand. But the single family homes are still pretty strong, but we're definitely seeing a lot of those second homes, vacation homes. And you can't vacation rental your house out right now. So anybody who had those Airbnbs, you either have to hold it and pay that mortgage or get a forbearance, but you're not collecting the money on that right now because you're not able to.
Or what I've seen people do is they transition their, short-term rental into a long-term rental.
Yeah.
There is that, but that is definitely a cash hit for folks who have been generating income as a short-term rental.
Yeah, definitely.
Which I must say, if we had less rentals in Sonoma, I think that would be a cool thing. Right? It would be nice to have more people moving here, living here, having their lives here rather than weekending here. So there is a positive. There's silver linings and everything, right, as these demographics change.
Right. It goes both ways. That's a whole nother conversation. What happens when a small residential community becomes mostly a vacation town? Then some people rely on that income. So would your clients appreciate that comment, Darren?
No. In general, right? There's a lot of people who have grown up in the valley, have been in the valley for a long time, and it's hard to watch it move from a really quaint kind of bedroom community to a vacationing community and a part-time community. You look at the east side, and it's a very different town than it was 30 years ago when I used to come over here when I lived in Petaluma growing up. So there's a lot of changes, and it brings me back to this idea or this concept. And I think, Chelsea, you're hitting on this thread, and Mary, you're hitting on this thread, that when we have these huge crises, everyone says, well, what's going to change? Well, it's not when we have big crises that we have things exponentially change from the way they were. It's that we see changes that are already taking place accelerate. right? So you think about all these things that we were unsure about as a society, whether it was meeting virtually, having court cases heard virtually, whether it was doing the virtual. I've noticed lately on like Zillow, you go on there and you can look at the house and they got the drone flying over and taking pictures of every room, right? It's those changes that I think are going to accelerate more and more, because we're going to really, I think, evaluate, regardless moving forward, is in-person contact worth the risk?
Right. And, you know, I've had clients before purchase property without going and physically viewing it. So I think now we're just that same type of thing, but we're evolving to the next stage.
Yeah, I mean, you have to, basically, it's like a adapt or die at this point. We need to adapt with the changes we're seeing, because I think, you know, this is our new normal. I don't think we're going to go back to the way it was before. I think we're going to do a lot more kind of at an arm's length business, especially until we can figure out either a vaccine for this, or, you know, figure out how to get a hold on it. Really, I think this is how things are going to be done. And more people are going to be buying things electronically, or virtually. I know a ton of people are online shopping. So, I mean, that hasn't stopped anybody. But I did want to point out one thing that I found really interesting was a poll was just done, and nearly a third of Americans are considering moving to a less densely populated area. So a lot of homes in the suburb areas are going to go up for sale. That just came out, I think, about a week and a half ago in a survey that was just done.
That seems it would have a huge impact on Sonoma, right? You think about, you know, I work in San Francisco. Up until COVID-19, I was going in the office every day. Guess what? Now I need to go in 2 days a week. You know, that house in Sonoma, we're moving there full time. Right? I think that story is going to play out. I think we were going towards a trend of, you know, urbanization. I can't help but wonder if COVID-19 is going to push urban sprawl again, because it's going to allow the commutes to end. People won't have to commute unless they have to be in the office.
Yeah, exactly. And I mean, we're finding out now, I think more employers are becoming more comfortable with letting their employees work remotely. They're getting the work done and they don't have to be in the office, which might help businesses who can get smaller spaces because they don't need to have all this workspace for all their employees anymore if their employees are working from home. So it could be beneficial for businesses as well in the terms of kind of keeping some cash on hand.
We've thought about this a lot too, and I'm sure Mary, in a similar place where you're in a traditional practice where clients come in, they see you, they sit with you, we go over their portfolios, we talk about their financial plans. That interaction of having to come in the office, although it's nice to see people and I love to see our clients, you have to wonder if that's essential interaction, right? Because I think that's the question that drives all of us moving forward is what's essential human interaction and contact? And you think, Mary, in your situation, will you be able to do all the things you're doing as far as helping clients virtually now, right? I think from our business, we're looking at our office space saying, you know, we pay a lot of money for our office space. Can we reutilize this differently to allow for maybe conference rooms that are sparingly used now when people really have to meet in person, or the normal review that can be all done online, right?
Well, for me, so my office has been operating as a law firm since the 1800s, and the part of my practice is necessary under the laws. Like when a person signs their trust in California, it has to be notarized. There are notary rules with respect to that. So until that for me changes, there is going to have to be some type of, you know, an in-person exchange for that final execution of documents. You know, same for you, Chelsea, with respect to deed signings, right? So, you know, but I do think you're right, Darren. I think there can be this embracing of technology to work other parts of that relationship to help serve people in a remote way, because I think people are going to be more comfortable with that too. When you think about it, especially if this virus mutates, you know, are they going to want to walk into their financial advisor's office and bring in their files, or are they going to prefer to do that in a video feed and, you know, communicate those documents to you electronically in some way?
Well, I have to say, between my 3 kids and all the clients I normally will see on a weekly basis, which is give or take 10 to 15 appointments, I get every virus there is.
Yeah, of course.
The system is rock solid. And so you think about that and you're like, I'm one of those linchpins that could distribute, right? Because I could get the virus on my hands, not know I have it. There's a lag time before I get it, and then hand it off to people. So it's made me really rethink about, like, I got a lot of clients that are compromised immune systems, that are older, that there is no purpose to interact with them at the risk of getting them sick. Right. And so I wonder if this will propel, like, the DocuSign world to figure out, how do we do this notary thing in an electronic way? How do we vote electronically? You think about the Wisconsins that went out to vote and a bunch of them got COVID-19. So I think it'll propel that, but I think it's going to take time for people to be comfortable with it.
Mary, I had heard that Zoom was now an option for notaries to get onto a Zoom meeting with somebody who's signing documents, and the notary and the client signing were able to do the signing over Zoom. I don't know if that's true, because you would still have to stamp and sign the acknowledgement, but I had heard that they were making movements towards that. Is that something you're hearing too?
I haven't heard that yet, but that would be welcome news. And I expect that that's the next step in this progression, right? If courts are allowing Zoom conferences and people to appear that way, then the notaries are hopefully just another step down that path.
Yeah, because for escrows and stuff, they've closed the escrow offices down, and they're just sending mobile notaries to the clients directly. So they're not having anybody come into the offices. They're just sending a mobile notary to the buyer, to the seller, signing the documents, and that's it.
Right. And I think traditionally, when I've made house calls to the dying client to do, notarizations of their estate documents, that all happens with mobile notaries in that person's place of comfort, whether it's the hospital or their home. So, that is possible, but there does need to be some type of clarification over the rules for notaries. And then also, it's also the laws that effectuate signatures too. So, I'm hopeful we will get there, and that would help this whole process.
Right.
When clients come to you right now, are you getting a lot of new clients? Like, what are their concerns right now? Or are people pretty much holding steady, and you're dealing mostly with your prior client base?
No, we're actually getting a lot of new clients. And part of that is because we're a little bit more tactical in our portfolio management style. We're not kind of just let it ride and roll with the wave. We use some technical indicators to kind of guide us in our decision making, because we think that the news and the emotions drive most investors off a cliff. So we try to avoid that and use some of the indicators to guide our decision making. And people are asking about their money now, right? If advisors aren't in front of their clients talking to them, then their clients are going to go find somebody else to talk to, because it's a scary time. There's a lot of changes economically, and it's important that people are aware of those changes, and then they know what's going on. Historically, we're going to be fine. We're going to get just through this just fine. We'll figure it out. The economy has a remarkable way of rebounding. The American people have an incredible way of leaning into the challenges that they face, as do all economies in all countries. We're really fortunate to be in the United States, because as bad as we think it is here for us, we have incredible medical, we have food, we have supply chains that are up and going. My heart goes out to, a lot of the third world countries that, literally by the millions will suffer from starvation this year, right? So you think about that in the supply chain degradation that happens there. When we get upset because our chicken isn't getting cut and we can't buy it at the store because there's a shortage, that it's on a whole different level. So I think generally I feel pretty grateful in this environment. I think the clients have been incredible through it. So I guess that's all I have on that one. Do you guys want to do a quick little market update before we close it out? Would that be helpful?
Darren, I actually had a quick question for you.
Sure.
In terms of inflation or deflation, what do you think we're going to be seeing? How do you think that's going to play out with all of this?
Such a great question. So inflation, deflation, gold, Bitcoin, and the U.S. stock market. That's the 5 top questions I get constantly. And everybody wants to know, hey, should I buy gold? Everyone wants to know, should I buy Bitcoin? And everyone wants to know, like, hey, Fed's printing money. Is my money going to be worth anything? And we have this inflation, deflation. So let's answer the inflation, deflation. Long-term, inflation is a real concern. Short-term, probably not. Deflation is probably a bigger concern short-term. Why? Because you have oil, and the cost of oil is so low. And so when you think of deflation, it just means the cost of what it costs us to do what we want to do with our lives and to pay for it, it's gone down. Inflation, it goes up. When you have things like oil trading for roughly $20, $24 a barrel, when it used to be at 50, 80, 100 at times, the cost to run our cars, to drive our cars, and so many products in the consumer world are made out of oil. So that's going to be a deflation. The ADP report came out today. It was 20.2 million individuals have lost their private jobs in the last few months. Tomorrow we're going to get the unemployment numbers. We're already at 30 million. We're expecting another 2.9 million on top of that number tomorrow. We'll see what the surprise is, to the up or to the low. Again, if you have people not working, they're not spending money, you tend to get inflation when there's more demand, right? And right now we're not seeing the demand. Till the demand kicks back in, it's going to be very difficult to get inflation moving again. Doesn't matter how much money you start printing. There's obviously thresholds with that. One of the really interesting things that we saw in this sell-off is that gold, stocks, and Bitcoin all correlated, and bonds. Every major asset class that people hold, it went down with the market in some degree or another. We haven't seen that break we want to see between stocks and gold and Bitcoin, those type of things that people think are hedges against stocks or even bonds. We're seeing them correlate right now. Until they stop correlating as tightly, it's smart to understand that you're not necessarily getting the diversification by buying gold or Bitcoin. So long term, yeah, inflation is probably going to become an issue. Short term, not for a little while. I think we got some time before that happens. We got to see demand kick back in, where people are going to start driving our cars more, that kind of thing, until the oil prices move up and that settles itself out. I don't think that's something that people need to be super concerned about. Now, late night television, they're going to sell you gold all day long, right? Buy gold now. Ignore them. They're just making money on storing your gold. Should we close out with quick market and any other last tips for this week?
Yes, please.
I want to hear about the market.
All right. So let me put my nerd hat on for a minute. This is where I like to spend my days, staring at screens. I was telling Chelsea and Mary before the call that in the month of March, my neck locked up on me because I was staring at screens so much. So what you've got in front of you is the S&P 500 E-mini futures. Why am I looking at the futures right now? Because this is the markets that are open after the market closes at 1 o'clock Pacific time. What you can see here is this is our high. This was our low made on March 23rd, and this is where we are today. This is a classic retracement pattern. Okay, so when we have major crises happening, what tends to happen is we have an initial sell-off. We have the market retrace itself, and then we have it roll over again. Now, this might be different than the rest of history, but we're waiting for that to unfold. And the reason why it might be different than the rest of history is because the Fed kicked in an enormous amount of stimulus, where they basically started just buying bonds. What that means is they go out, they buy the bonds, that puts cash into the market. It creates liquidity for investments. And then that allows money to go into the economy and get spent by other people who want to do other things with it. That was really critical. What we had happening here is we had liquidity crises. We had people who were over leveraged. Shocker, some of the big hedge funds and corporations were over leveraged. And when they were over leveraged, that forced a liquidity crisis. That liquidity crisis then created supply and demand issues in the market where there wasn't buyers buying from those who wanted to sell because everyone came to the market selling all at once. So guess what? The Fed had to step in and say, we're the new buyer. So by summer, we're expecting the Fed balance sheet to be somewhere in the neighborhood of $7 trillion by June that we've added. Trillion. That's a lot of money. Okay. So they're buying enormous amounts. On Monday, they announced they're going to buy another $75 billion in corporate debt. So basically, they're going to the corporations that are not looking great and buying their debt. And that debt then being put on the U.S. government's balance sheet at some point to be unwound. They think it'll take 2 to 3 years to unwind that from now. So here's the thing that matters with all this. When you get a big sell-off and you get economic calamity, it's all about duration, right? What's the duration? GDP was down 4.8% on this quarter, but that negative number was really only for the decrease in March. So we are expecting this next quarter, the GDP, to be 3 to 5 times worse than negative 4.8. So we're going to see some ugly numbers. We think that's probably being priced into the market currently. The question is, do we get a therapeutic or do we get a vaccine for COVID-19? Because if we don't get those two things, people just aren't going to engage the economy like they were before. It's just not going to happen, right? Yes, we'll get some engagement. Yes, stores open back up. But until we get a therapeutic or a vaccine, or we get some kind of freak disappearance of this virus, you're just not going to see the market go back up in a measurable way unless we call it the Fed put or the Fed tailwind. The Fed's coming in and just buy everything. It's possible they could come in and start buying stocks. Fed start buying stocks, you'll see this thing shoot right back up. However, I will show you on this chart, there's a couple things that make this really exciting for people like me that like to nerd out on this stuff all day long. This is the retracement, and the retracement came up to the 61.8% Fibonacci line, which is a mathematical formula, and it bounced right off that and came back down, went back up, and it's looking like it's rolling over after today. We'll see. We need some confirmation on that. But if this happens, what you're going to be seeing is what we call is a head and shoulders, not the shampoo, but a head and shoulders pattern. So if the market does this and then rolls back over this green line you can see there, that's called a neckline. That's one of the technical indicators that's pretty accurate. So about 85% of the time, if you see a clear head and shoulders pattern and a roll below the neckline, you can expect further lows. Will it test the March 23rd low? Anybody's guess. It's not unlikely if we go back in history and look through history, though. All right, that's about enough death by chart for the day. Mary, Chelsea, anything else you guys want to add for today for Sonoma?
I'd like to say my final thoughts are just, our data is just starting to catch up to our reality. We're really starting to get the information to see what is happening. Sellers, the buyer, the consumer out there, they are strong. They're looking at home loans. They're taking advantage of these low interest rates. And the buyers out there, it's never been a better time to buy. I can say that so many times, I don't know. It's just the interest rates right now. If you can take advantage of it and you financially are capable to pay your mortgage payments, take a look at those interest rates because, like I said, it's just the most affordable time to borrow money right now. And if you can make your mortgage payments, make your mortgage payments. Please don't do a forbearance just because you can. Make those payments.
Same goes for rent. You can pay rent, pay your rent. Same issue.
Because if you don't pay your rent, someone who has a mortgage isn't going to pay a mortgage.
Right, exactly.
It all escalates. Mary, any last thoughts?
No, that's it. This is stay strong, Sonoma.
And I'll just close out with our, all of us are licensed professionals here. So what does that mean to you if you're listening to this is don't take our advice. Yeah. What you should do from everything we've shared with you today is you should approach a professional, whether it's one of us or somebody else, and talk about your specific situation, because when we give educational advice like we're giving now, it's not reasonable to take that advice and act on it. So just as a disclosure that all of this is just for educational purposes, please reach out to us or professionals like ourselves if you're looking to get information on your specific questions you might have. Thanks a lot, Sonoma, and we'll see you next Wednesday.
Bye.